In this video, we will analyze the question, will XRP coin explode upwards? Please watch until the end so you don't miss anything. The current downtrend for XRP coin shows that the price is moving down from the upper levels and encountering some resistance. Such downtrends are usually an indication that the market has been under pressure for a while and buyers are finding it difficult to push the price higher. Breaking this downtrend could cause the price to start moving towards higher levels. If it breaks this trend and retests and succeeds, then it will make a nice rise. But we haven't looked at all the metrics yet, so we shouldn't make a decision right away. Keep watching. The bullish order block just below the price can be an important support level for traders. If the price falls back to a level close to this bullish order block, there's a strong possibility that buying pressure will come into play and the price will make an upward move. This means that buyers will see this level as support and buy here to move the price back up. I predict that the price may get a reaction from the bull order block and go up to the downtrend. A bearish order block at the top indicates a zone where selling pressure will increase when the price reaches a certain level. A bearish order block indicates a zone where traders have previously sold at this level, increasing the probability that the price will retrace after reaching this level. The area where such a bearish order block is located is usually considered a resistance level. Traders may expect the price to move upwards above this zone, but selling pressure may come into play due to the bearish order block. In this case, a downward correction or pullback can be expected if the price reaches this level. The impact of the bearish order block depends on the previous price movements around the peak level and the trading volume at this level. If the price tries to break through this level, but the bearish order block offers strong resistance, selling pressure may pull the price back and potentially cause it to move lower. And let's say the price broke the downtrend and did a retest. It will go to the first bearish order block, and it may not break the bearish order block at once. It will have to try several times. According to the Elliott wave theory, market movements usually go through a cycle of 5 waves. These 5 waves include 3 rising waves and 2 correction waves. In the current situation, waves 1 and 2 are complete, and wave 3 is usually considered the strongest move because it is usually the longest wave. Fibonacci levels are often used for the target of the third wave. Within the Elliott wave theory, the third wave is usually 1/618 times the length of wave 1. This is one of the Fibonacci extension levels, indicating that we can expect the market to move strongly upwards. If wave 3 is currently underway, this wave could target the 1/618 Fibonacci level. 1/618 is a mathematically ideal level, and markets are often seen moving up to these levels. However, the price may experience a few corrections before reaching this level, and the market may see some pullbacks. The third wave would be the longest wave and the fastest wave. I think it could go faster to 1/618 when it breaks the downtrend. If you are thinking of buying, you can buy when it retests after the break of this downtrend. We are currently observing that an inverted shoulder head and shoulders pattern is forming and making the head of the price. A Tobo pattern usually signals the end of a downtrend and the start of an uptrend. In the current situation, the price is making the top, meaning that the peak has been made. The price is expected to complete the pattern by making the right shoulder. After the right shoulder is completed, a break above the neckline level confirms the start of an uptrend. The target level of this pattern is measured by the depth of the head. The distance from the head to the neckline determines the potential bullish level the price will move to when the pattern is completed. If the price breaks the neckline upwards, this could be the beginning of a bullish breakout. If this pattern is successfully completed, then XRP coin could experience an upward explosion. Let's keep looking at the other metrics so we don't miss anything. Stay tuned, folks. An ascending channel structure is currently visible on the chart. An ascending channel is a structure where the price moves between an upper and a lower band, usually signaling an uptrend. In recent moves, the price touched the lower channel band and started to move upwards, receiving a reaction from there. This reaction suggests that after testing the lower band, the price may move back towards the middle band and the upper band. If the price continues to rise by maintaining the support from this lower band, there may be a movement towards the upper band of the channel. In an ascending channel structure, a price reaction from the lower band of the channel may be a strong buy signal. However, its movement towards the upper band of the channel may increase traders' willingness to sell. This may raise the potential for the price to break through the upper band and test the upper boundary of the channel. And one more thing, the middle band of the channel coincides with the downtrend, so it may not break there easily. The Bollinger Band is an indicator that measures volatility and allows us to analyze the breadth of price movements. Currently, the middle band of the Bollinger Band marks a resistance level that the price has faced many times in the past period. The price is unable to cross this middle band, and the narrowing bands indicate that the volatility of the market is decreasing and the price is stuck in a narrow area. The narrowing of the Bollinger Band is often considered a pre-breakout signal. This means that high volatility and large price movements may happen in the market in the near future. Since the price is unable to cross the middle band, it is unable to test the upper band and is moving near the lower band. This may indicate that the current move is in a correction or consolidation phase. The breakout will come as the Bollinger Bands are narrowing, but you need to be patient for the breakout to come, because the tighter it gets, the harder the price will break out. The MACD indicator is a powerful indicator used to measure the momentum and trends of an asset. Currently, it is observed that the MACD is making an upward crossover from the lower side, and this move is just beginning. This kind of crossover is usually considered a buy signal, indicating that the price may be trending higher. The MACD shows the difference of two different moving averages. In this case, the MACD line crossed the signal line from bottom to top. This crossover signals that short-term momentum is starting to build and a potential uptrend in the market could begin. However, since this crossover is recent, it's hard to say for sure how strong the move will be. If this intersection can break above the zero line, then the upside will accelerate. The RSI indicator is a momentum indicator that helps to determine whether the market is in overbought or oversold zones. Currently, the RSI indicator is showing a downtrend. This downtrend shows that the RSI has been moving down from a certain level over time, and that this decline is creating some kind of weakening or resistance. However, the RSI has managed to break this downtrend. Breaking a downtrend is usually interpreted as a strong buy signal because it shows that the bearish momentum in the market is fading, and there is a potential for a bullish breakout. However, despite the fact that the RSI has made this break, a retest has not yet taken place. A retest is defined as the price returning to the level it broke and taking support from there, which is an important step to confirm whether the breakout is sustainable or not. After the retest, the RSI will be ready to increase, and since the price moves with the RSI, the price will rise with it. The Vortex indicator is a technical analysis tool that measures the buying and selling power in the market, and it consists of two main components, the blue line and the red line. These lines help us understand the direction of price movements by determining the momentum of the market. The blue line usually represents bullish momentum, while the red line indicates bearish momentum. If the blue line crosses the red line upwards, this is a signal that the market is starting to come under pressure from buyers and prices may move upwards. On the contrary, if the red line crosses the blue line from top to bottom, this indicates that the bearish momentum is increasing and prices are more likely to move downwards. Currently, the blue line on the Vortex indicator is about to cross the red line from above. This indicates that an uptrend is about to begin and buyers are gaining strength. If the blue line crosses the red line and heads upwards, this could be considered a strong buy signal. In this case, the upward movement of prices may accelerate. The Vortex tells us which trend we are in. Think of it as saying that we are now moving into an uptrend, so prepare yourself accordingly. When we look at the 200 EMA, the price is trying to get above it, but it cannot be permanent. If it can get above it this time and be permanent, we can see a long-term rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.